Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with UK FTSE futures. A seventh bullish white soldier yesterday, but it was really a higher indecisive spinning top. This was a continuation of the follow-on from the recent unusual bullish engulfing pattern type. It was also the fourth consecutive close over the upper trend line, currently 74.57, of what I had labelled a possible descending expanding wedge pattern, currently 74.57 to 68.81. Now, as you may know, I haven't been entirely happy with this pattern, hence there is a heavy dose of the word possible in front of it, even now. For starters, it hasn't completed the usually requisite 5 touches combined of both trend lines. Yet leaving that aside for the moment, as well as its short life and steep downward angle, leaving all those aside, if we do have such a pattern, then last Friday was a likely confirmation for it. This leads to 2 diametrically opposed questions. 1, is it a false break higher? 2, how high will the move be? Okay, so for question 1, well, we don't know, not yet. But I suggest looking at what the market does when it approaches the January 2020 high at 76.30 and also this year's high at 76.35. Well, that should give an idea of its validity. For question 2, well, a primary target X would be in the 78.67 area, with a secondary and much harder to reach target X1 in the 78.46 area. These are big asks of this market, especially from what is in truth a not too good looking descending expanding wedge pattern. So what do we have above as resistances? Well, we've pierced but not yet closed over the obvious one, which is May's high at 75.99. Then there's a congestion around the January 2020 high at 76.30 and more recent high at 76.35. Meanwhile, on the downside, below the broken upper trend line, we have the combination of 2 moving averages, the rising short medium moving average, currently 74.50, and the medium moving average, currently 74.26. This last bit brings me nicely to a new factor, which, though lagging, may help influence the bullish side. We had a golden cross last week of the short medium moving average up over the medium moving average. For that, I'll finish this portion. So far today, well, an interesting attempt higher, breaching the January 2020 high at 76.30 and also this year's high at 76.35. However, prices have since pulled back, though they are up on the day, though looking like we may have another indecisive, if higher, spinning top if we close at these levels. German DAX futures. Another very interesting day yesterday with a third bullish white soldier. The pattern itself, unlike the previous sessions, was very interesting. It was a gapping higher move since filled in that rose up and tackled the declining medium moving average, currently 14,500, thus breaching the next obstacle overhead. We next have the April highs at 46.17 and 46.23 before looking at the declining long moving average, currently 15.082. This is further evidence of the market's efforts to untangle itself from a real mess of congestion below, consisting, and this is in no particular order, the upper time stroke upper trend line, currently 13.984 of the January to March bearish shift pitchfork, which was also the upper trend line of the late March to date descending expanding wedge pattern. Then there's the neckline, currently 14.007 of December 21 to February 22 head and shoulders top, plus a separate mess of resistances which stretch from 14.079 to 13.084 and which include the February 2020 low at 13.821 and the 50% Fibonacci line of the October 2020 to November 21 move at 13.804. Yes, this is a real mess of congestion below the market. Anyway, the market pushed up and out of that mess and closed over all of those 3 sessions ago. All these are now supports. In addition to this, yesterday was the second consecutive close over the 50% Fibonacci level for 2022 at 14.342 and the first close over the medium moving average, currently 14.500. The result of all of this is that the market has taken the first steps in moving above the proposed descending expanding wedge pattern, which is a big move. Indeed, this pattern now has a primary target X in the 15440 area and a secondary and hard to get target X1 in the 15725 area. These are big asks. As overhead, we have the April highs at 14617 and 14623, as well as the lesser 61.8% Fibonacci line for 2022 at 14798. And finally also the March high at 14945, and that's actually before we reach up towards the long moving average, which is currently 15082. We'll see how all these develop. So far today, a lower open and a reactionary move back down, back below the medium moving average and towards the Fibonacci congestion of 14393 and a 2022 50% Fibonacci line at 14343. That's actually just below that. US E-mini S&P futures. A third bullish white soldier on Friday, a bullish long white Mariposa this time, and yet another suitable follow-on high to the recent two-day bullish separating lines pattern. This time the market opened a little lower, but moved up through the important 40.55 level, the top of the congestion band 39.59 to 40.55 that tried to trap the recent market, also pushing up through the June high at 41.26. Overall, this continues to be a pull up and away from both the lower time, currently at 38.93 of the January to March bearish shift pitchfork, as well as the middle time, currently 38.47 of the bearish Andrews pitchfork for the same period. So we've got both the Schiff and the Andrews. Regular watchers and listeners will know I have had earlier highlighted a crossover of these two times on Thursday 2 weeks ago as a period where one could expect one or more of the following: volatility, a change of trend, or a reinforcement of trend. As I previously said, this was an important time period, and I highlighted it with a red circle on my daily chart. I've also drawn another red circle for the next crossover to come for these same pitchforks, assuming that both pitchforks will still be operational, which looks like it's going to be so. This is the upper tine of the bearish Andrews, currently 42.21, and the middle tine of the bearish shift pitchfork, currently 41.93. And it will happen in a few days' time on the 7th of June. Hence, I renew my warning and what to look for. To look for volatility, a change in trend, or a reinforcement of trend. Before then, this current move higher now threatens those same two tines, as well as the recent 50% Fibonacci line at 42.19. Well, so far today, higher open and a move up to pierce the middle tine of the bearish shift pitchfork, but this action has apparently been rejected with a move back down through Friday's close and down to the next support below, the June 2021 low at 41.26. This is not quite a bearish dark cloud cover pattern. It needs to drop and close below 4100 today to make that happen, but it is not far off. What it does look like right now is a shooting star pattern, type 1 bearish. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investors Services International Limited. And here comes the final bit.